Hello and welcome. My name is Giacomo Lattis, and this is the first episode of the Rentals.ca Data Dive, where we answer your questions about what's happening right now in the Canadian rental market. I'm joined today by our Data Service Manager, David Aizikov, who's really instrumental in putting together the Rentals.ca National Rent Report. David, thanks for joining me today.
Always a pleasure.
So, what we are going to do today is answer some of your most asked questions that David and I have received quite a lot of throughout the media, especially right after we sent out the rent reports, and especially as of late, because there's been some major changes in the market. So, David, we're just going to jump right into it. A question that I'm sure you've been getting a lot. The rent report on Rentals.ca shows rents decreasing across the country, but this doesn't seem to align with what we've been seeing in our overall portfolio. Should investors be concerned about this trend?
If that's not something you're seeing in a portfolio, I'm certainly jealous. I don't have a portfolio.
Guilty here as well.
What I can tell you is that when we actually break down the changes in market rents by property type, we're seeing that different parts of the market are moving in different directions. So on the purpose-built rental side, which is typically going to be somewhere in the range of 15 to 20% cheaper than the condo side, or condo rentals, that is, we're seeing that rents are relatively flat year over year. There hasn't really been substantial declines. There hasn't been substantial growth. It's really just been flat year over year. The bulk of this decline in asking rent is coming from the secondary market. Secondary market really just means condo rentals. So in the first half of 2024, we've talked about this a lot, but we had this surge of condo completions. We had a lot of these investor-owned properties that had been bought up 3, 4, 5 years ago with the intention of being used as investment properties. Well, these properties finally came to market, some on time, some may have been late and came later than expected. But because there was this deluge of properties, there was all of a sudden there was a lot of competition at the top of the market. There was a lot of competition, certainly at the higher price point of condos, which is where a lot of condos are coming to market, right? These are not mid-market. These are not affordable condos. These are typically luxury-oriented properties, and luxury properties deserve luxury prices. Mm-hmm. So with all this competition at the top of the market, in conjunction with a lot of price exhaustion that we were seeing, we'd already been seeing that a few months prior. We saw that as a response to just a runaway rent growth over the 2 years prior. We saw that it really just wasn't sustainable. And as a result of that, a lot of these investment properties, investment condos, they saw repricing. They were repriced lower and lower and lower in a bid to get these properties leased up. And that resulted in the overall average rents declining. We saw this in Toronto. We saw this in Vancouver. We saw this across many markets with a large inventory of investor condos.
Mm-hmm. Yeah, that's interesting because I think the exact numbers are like, and I've been asked this a lot, rents are still about 16% higher than they were 3 years ago on a national level, and I think 5% higher than they were about 2 years ago. And a lot of that is coming from exactly what you said. Even though they are coming down, they're still a little bit inflated. So that was a really interesting part of the last rent report that I've been seeing a lot of people cling to.
Yeah. We like to focus on the immediate past. We like to focus on the trends that we've recently experienced. And yes, we had runaway rent growth post-COVID. Once that happened, we saw flattening. Since then, we've seen a stagnation of rents. I believe that we're now at a 18-month low in terms of average rents. But what it doesn't take into account is the long-term trends. When we actually break out rent growth, we see that over the last 5 years, the annual rent growth on average has been about 3.5%. When we look at the last 20 years, average annual rent growth is somewhere in the range of 3.4%. So what happened was, yes, we had this really strong accelerated rent growth in a condensed period of time, but that was a result of or response to lowered rents during COVID. And really what we want to see is that the long-term trends are relatively flat and stable.
Yeah, and just asking just myself, is that a 3.5% average increase? You would consider that a healthy increase? Is that what we should be seeing?
Based on the trajectory of historic rents, based on where the market has been, that is considered relatively healthy. That being said, it's not reflective of everything that you would see, and it's also not reflective of a highly competitive market. It's not reflective of the individual nuance that you might see.
Gotcha.
On a national scale, we didn't see very much rental construction 20 years ago,
No.
15 years ago, 10 years ago. We were, however, seeing really strong growth, rental construction 20 years ago in certain markets, right? Calgary, Edmonton, um, Montreal. All of these markets have really strong culture renting. They have a history of rental construction. As a result of that, their rent growth has been a little bit more stable.
Mhm.
So 3.5% on a national level, I would consider to be relatively healthy based on at least the long-term trends that we've seen.
Gotcha. And like naturally, a follow up to that is what I'm always being asked to answer, and it's how do you think David Aizikov renters should feel right now about declining rents, and maybe on the flip side, how should landlords feel?
By and large, I can't say what landlords should feel. I can't say how renters should feel. They shouldn't feel excited, but there is hope out there, and I see that this is a healthy sign for the rental market as a whole. For landlords, certainly, professional property management companies, what we expect is that during the summer, rental demand will rebound.
Mhm.
It'll rebound because over the last year, we've seen rental demand really decline pretty dramatically. But over the last, I would say, 3, 4 months, we've actually been seeing stabilization, moderation of that trend, which is a positive indicator because summer season is typically the highest rental demand season of the year. For property managers, that's a good sign. It means that when new properties are coming to market, they're likely going to have more competition, more rental demand. For renters, on the other hand, this is another really interesting time period because, again, the last year we saw a lot of people leaving the rental market. We saw this mass exodus of many renters who simply chose to stay in place. Turnover rates were down. CMHG indicated that they're down substantially year over year across the country. And as a result of that, we see that people are simply staying in place. They're not moving as often.
Mhm.
They're not willing to go out looking for new home because they don't want to have to pay that premium, the new market rent premium. And that's also further worsened by just a lack of security. People don't feel secure in the economy. People don't know where things are going, and that's been the case through most of 2024. Moving forward, I think that uh, a lot of this demand has been pushed down long enough where there are going to be more people that are just going to move out of circumstance, out of necessity of life, whether it's work, school, personal life, what have you. We're going to have more and more of these people that have been delaying a rental move. They're going to be moving, and that's going to see rental demand drive up. Increased rental demand is likely going to result in increased average rents, or asking rents, I should say.
Mhm.
So if you're looking for a unit, I advise you to start looking now, not later.
Yeah, that's kind of what I've been saying. I think this is a little bit of a softer period of time now where renters can actually take advantage of some of these declining rents. And I think I want to touch back on what you're mentioning there and stuff that we've been seeing on our site. We've been seeing studio and three-bedroom apartments demand stay really strong. And, I think that has a little bit to do with turnover rates being really low. People are not planning on moving out of their apartments for a long period of time. Well, wouldn't you want the biggest space because you plan on being there for the longest period of time? But also, if you have a three-bedroom apartment, you could rent it out to two other people. And then obviously, studio apartments are the cheapest rents. And I think that demand, I could be wrong, but I think studios and three beds are still going to be really high in demand throughout this year.
You're absolutely right. So over the last year, we have seen a trend of declining rental demand across for one beds and two beds, which is interesting. Now we assumed, well, people are more interested in affordability. They're more interested in cutting costs. Two beds are going to be up there. That's not the case. And the decline of two bed rental demand coincides with the decline of two bed availability.
Gotcha.
Okay. There are
Interesting.
fewer two beds out in the market, which means that there's just less of it available. And however, in addition to that, we're also seeing that a lot of the people that are looking for two beds are looking for three beds now, right? That unlocks further affordability. And then a lot of the people that might be looking for two beds are already in a two bed and have simply decided not to move, right?
Right.
So that's one factor. On the broader scheme of things, we are seeing that studios and three beds, we're seeing the largest overall year over year increases
Hmm.
relative to the year prior. And what we see is really that renters are looking more and more for ways to unlock more affordability. Studios are more affordable than a one bed.
Yeah.
A two bed, even though it is relatively down, it's still very, very popular. They're still the most popular unit type, and they are, or I should say, second most popular unit type. Excuse me, and they are still more affordable than one beds. Right? Why pay $2,000 for one bed where you can split the rent for a two bed and you can pay $1,500, or move up to a three bed and now all of a sudden your rent has been cut further down and you're paying anywhere from $1,300 to $1,400. You have a larger suite,
Mhm.
you have potentially more amenities. The only downside is a lack of privacy, right?
Yeah, but and that's the thing too. Like for someone who doesn't really know the rental market as well as we do, right? A one bedroom to a two bedroom, we're not doubling the price, right? It's actually quite reasonable if you think about having a roommate. Going from one to two does make a lot of sense, and then two to three even more so, right? This is not a doubling or tripling of a one bedroom apartment. So I think you're right. The trend is going to continue because of affordability. Okay, yeah. A question that I answered, I think, twice today already on some radio shows was, what advice would you give to someone who wants to get into the rental market right now, but sees that prices in their city are maybe a little bit higher than they expected or a little bit higher in their budget? We did touch on expanded bedroom types, meaning expanded options such as having roommates, but do you have any other advice for someone looking to get into the rental market?
Yeah, that is a great question. One that I hear quite often, not just when I'm doing radio interviews, but I just hear from family and friends. Uh,
Yeah.
First and foremost, don't get discouraged right off the bat when you see the average rents that are being listed, because again, remember, it's an average. It means that half of the rents are above and half of the rents are below. So if you can't afford the average, that's not to say that there's nothing in your price range, right?
Hmm.
Even in the fastest growing rental markets, there's always going to be variety. It might be harder to find, but it's going to be there, and it's your job to look for it. What I typically say is get educated, look online, spend time looking before you're down to the crunch and you have to make a decision. You don't want to rush. You want to spend time looking at units. You want to spend time figuring out where you want to live, what your price point is, and then just looking and learning about what
Yeah.
potentially is available. That's the first step. The second step is, I personally value my privacy. I'm willing to pay premium for that, and I've always done that. But that might not necessarily be in the books for everybody. So if you are comfortable with roommates, whether you have friends, or if you're willing to just find a roommate situation online, that's always a viable option, and that could potentially unlock substantial savings for renters. So don't be shy, even if you don't know these people. Most people are very pleasant, very
Yeah.
nice, and I recommend you reach out and see where things go. At the end of the day, you don't have to make a decision then and there, and if you're not comfortable, move on.
And I'd like to add two quick things that I think are really relevant right now in this market is, and these were not really available for a few years now, but if you visit Rentals.ca and you look at any city, I think you'd be surprised on the amount of move-in incentives that are being offered in a lot of these properties. You might actually have an advantage right now in seeing what different units and different buildings are offering, such as free month of rent. Some are offering free internet. There are a lot of advantages right now if you're a renter, just because there is a real need to get your attention again. So look for mood incentives as much as you can. And I think the other thing is important to know for those who have not really gotten into the rental market in a while is there's a lot more that now comes in your rent, right? A lot of these buildings now offer premium amenities such as gyms and social spaces and pool. Like you're getting a lot more sometimes out of
Co-working
your rent,
space.
co-working spaces. So I do think it's really important to also look at that. Look at what these buildings are offering because you might actually be able to save some money in certain areas of your life by moving to some of these buildings that a lot of them are offering almost condo-like lifestyle. So I think just really look at what a building is offering and check out these moving incentives because they are really back with a vengeance. And I think you could back that up, David. Moving incentives were gone for a while when demand was really, really high.
Yeah, that's always the case with incentives. When the market heats up and apartments are moving easily, when it's a seller's market and not a buyer's market, or it's a
Hmm.
landlord's market and not a renter's market, there's no incentive, right?
Right.
Units will get leased up; they don't have to push them very hard. Whereas we're currently in the midst of a renter's market, right? The renter has more power now than they did the year before, certainly more than the year prior to that either. And so, if you're looking online right now, there is going to be an incentive available to you just to sign the lease.
Yes.
Another very important consideration that we didn't talk about yet is the fact that there are differences between condo buildings and purpose-built rental buildings,
Great
right?
point.
I know a lot of people, they like to just say, this is where I want to live. This is my budget. Here, realtor, find me a place to live. And that makes things a lot easier. But the problem is that you're paying someone to offer you that service. And if you are more price conscious, if you're trying to find additional savings, do the work yourself
Yes.
and consider a purpose built rental building, because a purpose built rental building offers additional benefits outside of what a condo building would offer you, right? One, purpose built rental buildings are more likely to offer you incentives. Simple as is. Condo buildings, they're not going to give you incentives because each individual owner owns the unit. They're going to, contract it out to a realtor, and the realtor is going to lease it up. They're going to take, half a month's rent, 1 month's rent, what have you, as their commission, and there's no savings for you. If you go to a purpose-built rental building, they might offer you 1 month free rent. They might offer you free utilities. They might offer you free parking for some period of time, right? That's there because they're able to pass that incentive along to you. And then on top of that, there are other benefits, security of tenure, right? A purpose rental building, you have greater security. You're not likely to get moved, to get kicked out or get served an N11 notice, so that, their niece or nephew can move in. And there's more stability, right? You have property management, you have maintenance staff. There are benefits there. And if you're willing to put in a little bit of time to find a really good unit, you can get those benefits for you.
Love to hear it, David. Thank you for that. Our friends out in Saskatchewan will love that we're asking this because I get it all the time. Do you think we will get to a point where secondary markets are as expensive as cities like Toronto and Vancouver? I know what my answer is, but I mean, we're asked that every week, every month, especially with the reports coming out and seeing Toronto and Vancouver have been decreasing for a while. But, areas like Edmonton, Saskatchewan aren't seeing the exact same thing. So are we going to get to a point where these secondary markets are like Toronto and Vancouver?
Short answer, yes. Long answer, they will. However, when secondary markets are as expensive as primary markets will be substantially more expensive. Uh, you know,
Well, I can't tell them that. No.
15 years ago,
Yeah.
two-bed apartments in Toronto were about $1,500. That's roughly where Saskatoon is right now. One beds were trading just under 1,200. That's where Saskatoon is. Guess
Yeah.
what? Saskatoon is as expensive as Toronto was. Um, you know, a rising tide lift all boats, and over time, with inflation, with the cost of living going up, all costs will continue to drive upwards. In the 1930s, you could find a single unit for $30, right?
Yeah.
Now you'd be hard pressed to find a bedroom for $30. Maybe if you had an extra zero, maybe change the three to a six, and that
Yeah.
might be getting to the start, right? Um, they will continue to inflate in price, and that's a matter of prices will inflate over time, but I don't expect, unless any substantial changes happen to some of these secondary markets, they blow up, they become metropolitan, they offer world leading amenities. The primary markets that achieve these top of market rents are going to remain in place because there's a reason they charge those rents. They charge the rents because people want to live there, right? I love Calgary. Calgary is a beautiful city,
Love,
but
we were just there. Yes. We love
it has
Calgary.
brutal winters,
Yeah.
and that's one of the downsides. And that's why Toronto and Vancouver, which Toronto specifically doesn't have the mountains. It's not as beautiful, in terms of nature, but Vancouver has the mountains nearby. And Vancouver doesn't have that, a really intense winter. So people want to move where the weather is nice, where it's beautiful, where there are really good cultural, social amenities. And when that happens, the price of everything goes up.
Absolutely. And I do think like, they're obviously going to go up a lot in prices in 15, 20, 30 years down the road. Like I like to look at it as it'll never be Vancouver and Toronto and a lot of these cities just because, Calgary physically has room to grow, to build out, right? Toronto has very limited space where they can go. It's a very old city, and then you have a 250-year-old building next to a brand new condo next to, and then Vancouver, well, you literally have the ocean, and then you have mountain like this space is unavailable as much as it is in other areas across the country in Vancouver and Toronto. But like you said, I do think by the time secondary markets are at these prices, Vancouver and Toronto will be even higher. So I think you're right about basically all about that. Okay. Are rents in primary and secondary markets, as a follow up to this, are they starting to converge now as more condo units are being put up to rent? Why I'm asking this is because anecdotally from everyone, they say they can see cranes in the sky like crazy. We're building, we're building, we're building. And I like to think that we're building purposeful rentals now, finally. We're not seeing an influx in condos being built. It seems to really have shifted to purpose built rentals. Do you think, though, because of that shift and we were really focusing on condos, that had a big thing to play in the factor of primary and secondary markets really starting to level out?
I
And it's
think
okay
that
if it's a
with
no. It's okay if it's a no. These are not our questions.
it's a complex question, and I think that there's no straight answer for it. I'll be honest.
Sure.
I think that secondary markets will continue to grow as they become more appealing. Certainly, in the last 6 months, we've seen a trend wherein young professionals, couples, young families in larger urban centers are moving further afield to these outlying suburban communities, typically favoring those with um, greater affordability, more availability or opportunity for rentals,
Hmm.
and larger units. However, these communities all have one very important factor in common, which is that they're accessible, right? Whether they're commuting or they're working hybrid, uh, they move further out because it gives them the option of be remaining connected while still giving them the space they want to raise a family, right? Um, in primary markets, I think that rents will continue to do what they've always done, which is that the primary rental market will continue to be stable. It's managed. The pricing is done consistently, and it is priced conservatively based on what they believe can be achieved in the market. Whereas on the condo side, they don't have as strong, or individual condo owners don't have as strong market knowledge. They're not pricing 100 units plus at a time. They're pricing one unit, and they're trying to maximize the return on that individual unit, however inoften it might become available.
Hmm.
And so I think that the secondary market is always going to remain more expensive. On top of that, with the secondary market, you've got a lot of properties that are substantially upscale. Obviously, in the purpose built side, we also have really high end properties, and those are also going to charge top of market rents. But I think on an aggregate basis, I think that we're always going to have that disparity between the primary and the secondary markets.
Gotcha. And one final question, I think we've touched on it throughout the conversation, but what is the latest REM report? And I guess you could say the last few REM reports say about consumer preferences. We've touched on it a little bit, but just to wrap up, what does this actually mean about what people are doing? You just said people are now moving a little bit farther away, but anything else to add to it?
Yeah, so I talk a lot about the demand side. I talk a lot
Hmm.
about what renters are, or how renters are reacting to changes in the market, how renters are reacting to changes in availability, changes in rents. But we haven't talked, at least not just now, about changes on the landlord side, changes on the availability side. So we talk a lot about the primary and the secondary markets, but we haven't talked about shared rentals, right? Roommate
Yep.
rentals, and that has been a pretty big point over the last, a point of interest, I should say, over the last 12 or so months. And 12 months ago, we started seeing substantially more condos on the market. We started seeing the incidence of an entire condo being listed out for roommate rentals, right? So you have an investor owner who, instead of wanting to rent it out to one person, they want to create their own roommate situation by renting out both bedrooms, independently of one another.
Hmm.
That was something new, and we started seeing that quite a lot in Toronto, Vancouver. Then we started seeing the creation of a lot of these older properties that are being subdivided up into individual bedrooms. That was happening in a lot of secondary markets and Montreal. And now, in the last, I would say, probably 2, 3 months, we've started to see in a lot of secondary markets again, but also in a lot of the suburban areas around primary markets, we've started to see quite a lot of older properties. So these are older properties, and they're beginning to offer substantially more affordable accommodations. Uh, However, you're not getting the finishes, you're not getting the quality, you're
Sure.
getting a much smaller space. But ultimately, what that tells us is that it's not just renters that are looking for more for more out there. These are property owners, homeowners that are looking. We have quite a few instances of a homeowner looking to sublet one or two spare bedrooms We see listings where they would say, looking to rent a spare bedroom on the second floor. Renter will be sharing the unit with other residents. Turns out the residents are just the family of the
Yeah.
homeowner, right? It's the
Yeah.
homeowner, his wife, and his children. Um, so we saw quite a lot of that. So really, there's just been a variety of these listings coming to market as people try to reduce the expense their daily expenses.
Well,
Really, that's what we saw.
and that's the thing too. It's like this affects not only renters but landlords. How many landlords and property managers do we have on our site that are small time landlords, only have a few units that are available, right? So there's that whole other side of things too, where these are asking rents that we're talking about, and they're not just large companies with major portfolios, right? These are small mom and pop landlords that have to adjust as well, especially in a market where it is a renter's market where now there aren't more options. You mentioned turnover rates are low, but if you're a renter and you've been in your unit for a while, well, now when you go on Rentals.ca, oh, this place is offering me 2 months of free rent, and it's actually come down, right? So I think it's going to also shift a little bit in you know renter retention from property managers because of the options that are might be available in the near future. So it's going to be really interesting to see what's going to happen. All right, alrighty, David. I think I've taken enough of your time today. This was our first episode of the Data Dive, and we are looking to have this continually, especially as the market changes. So, David, thanks again. The national rent report is up. You can just go to rentals.ca, and right at the top, you're going to see rent report. You're going to see all our latest information, as along with historical reports if you're interested. So, again, thanks, David. Appreciate your time, buddy.
Take care.